Hello traders, welcome to your technical market update for Wednesday the 11th of March 2015, and we've seen big moves in a lot of the currency pairs, and as I said in the fundamental video, it would appear that it's US dollar strength, but during yesterday's session we started to see some risk aversion signs in the bond markets. The equity markets were heavily sold off, and that means that the US dollar strength story is still lingering because it's evident in a lot of the currency pairs. However, the market is getting worried about the situation in Europe and the effects of buying $60 billion of bonds to try and boost, which typically should boost the European stock markets, has actually had an opposite effect with people getting a little bit worried behind the liquidity. And this came on the back of Germany's bond rates actually hitting negative interest rates. So that means that the ECB will be buying debt that's going to cost them. And it's not a good thing at all. So they started to get a bit worried as soon as that became evident. Anyway, let's look at the charts and we'll see what we've got coming up. I'll look at the New Zealand versus the US. We're on the daily chart. As you can see, it's just red after red. And we are approaching lows seen in January this year. We've had this fall, we've had this retracement, we've had this resistance, this double top, and we've fallen away ever since. The falls have been quite severe in the New Zealand dollar, and as I mentioned in the fundamental video, there was a threat on Fonterra, and this also accelerated the currency fall. So if you missed that video, make sure you check it out, and that'll help explain why the New Zealand dollar has been worse than all the other currency pairs against the US in recent sessions. So we are reaching this level here now. This level should be taken out if tomorrow's RBNZ's interest rate decision is to leave it on hold, but the tone is moving back towards a dovish from a neutral stance, and they start to indicate that they may have to cut rates into the future. That'll definitely send it lower. However, if they say that they are looking to raise interest rates to try and prevent the property bubble, well, then we will see a bounce in the New Zealand dollar and support would be given, and I don't think we'll breach this level tonight. So keep that in mind, and that's a trade that you can definitely follow depending on where you are in the world, and there should be some opportunity there because I think there's a lot of people focusing on what New Zealand's actually doing, and that's ever since they come out with this policy where they're looking to tax housing investment over housing for residential purposes for people to live in. So it become more expensive to invest in property within New Zealand, and that was to try and curb the inflation in the housing prices, which are becoming out of reach for many local people. It's likewise in Australia, so it's actually been watched quite heavily by a lot of countries to see if that policy goes through and to see the effects that policy has. So we'll keep an eye there. The Australian dollar has taken out the lows, so we are now at 5-year lows on the Australian dollar. We did dip below 76 cents earlier today, so we tested 75. We've bounced off it a little bit, but it's just been evident that the market is pricing in what the Australian economy is actually doing, and it's not doing real well. So we could continue to see falls. However, we always have to bear in mind that after a big move like this, there is always a chance of a short-term bounce that can catch people out, or what we call a short squeeze. It means that the market is excessively short and all of a sudden retail investors get caught, and that will create a bounce, and we will then see the smart money getting back in up here and then continuing on. What can cause that bounce has got nothing to do with Australia tonight, and it will come down to the risk aversion in the US dollar. But tomorrow, tomorrow is it? No, it's on the Thursday. Yeah, so tomorrow we do have the employment change in Australia. I apologise, I should have known that off the top of my head. And that will definitely affect the Australian dollar. If that comes in weak, we will see this continue to fall and continue to make new lows. Now, there's not a lot of historical support. So if I was to go to a monthly chart, you'll see here that where the market is right now, we've seen some price action around those levels, and we've seen it all the way back to 1993. But then after that, we've got no support till the GFC. You could look for historical levels, and one could argue that there is a level there at 70 cents. So we are moving within this range here, and we'll have to wait and see whether it actually gets below 70 cents. It usually only goes below 70 cents when things are really looking bad for Australia, and I don't think we're there yet. So we could be getting closer to a bottom than the top, obviously. And we need to bear in mind that we've had big falls, and there is a chance of just a short-term bounce. Now, a short-term bounce doesn't mean that the trend's over. It just means that the market is having a healthy movement, that trends just can't continue to move in a straight line like they have. So keep an eye on the employment report, and we'll see what happens. We could be moving into and talking about 75 cents before too long, that's for sure, and possibly lower. If I go to the Great British Pound, we've pulled up and we've held support here over the last few sessions from the lows. So we had this rising wedge, we've had a breakout. Once again, we've had some pretty big falls, and it's quite surprising the size of the falls. It caught me out a little bit. Like, I did trade it through here, but I didn't get this move. And that's been surprising to me, but we have started to find a base and support. So I'm not looking to short this now until we take out the lows and there's some fundamental reason behind it. And that could possibly be at some point the BOE could come out and say that they're not looking to raise rates this year, and that would definitely send it lower. However, I do believe that there's an opportunity for a bounce in the pound, because the UK economy is not going too bad. Their data's fine, they're quite stable, but at the same time, I don't see any need for them to raise interest rates because their inflation isn't getting out of control. So they could just be in a holding pattern and waiting for the rest of the world to start to sort their stuff out before they need to do anything. So keep an eye on that with the pound. Now, we don't have a lot of data. We've got some trade good coming out of about the pound on Thursday, and other than that, we've got some on Friday. We've got the Bank of England's quarterly bulletin. That won't have a lot of impact. So it's going to be driven by the US dollar and this whole risk aversion story. We do have some manufacturing coming up tonight for the pound, so that may have a little bit of a movement. But then also note that later on tonight we do have an MPC member speech, and depending on what he says, it could move the pound around. So keep an eye on the news wires for that to see if there's any comments about interest rates there. The euro has been spectacularly poor, and we've had this consolidation and this breakout, and just continues to slide. Now, the negative bonds haven't helped either, and there's a whole lot of factors. This fall is justified, but I wouldn't be surprised if we do get a short squeeze at some point. Now, I'm not calling it tonight, I'm not calling it this week. I don't know when, but I am starting to move my stop losses down, locking in profits, and I wouldn't be surprised if we do get a short squeeze. I am fully prepared for that and keeping an eye on it, but at the same time, it's not going to prevent me from continually adding my positions lower, because I'm just going to keep trading with the trend until I see evidence of something else going on. So don't take my advice or my comments as a reason to take profits and that it's not going to keep falling, because they are doing quite poorly there. Just out of interest, we haven't spoken about the US versus Swiss franc, but the US dollar strength that's when Armageddon happened, and the world was going to collapse there when the peg was taken from the euro to the Swiss franc, and a lot of brokers and a lot of people copped a lot of pain, and it's quite interesting that we're nearly getting back to those levels again. But yeah, it is very interesting. But we've got the US CAD now. This is the daily chart, and we've had this breakout. It continues to grind higher, and that's purely on the back of the US dollar strength. I spoke about here on Monday how we had a pullback. It tested the back of the breakout, and we've had support, and I spoke about how we could get in and put our stop loss under there. I've moved my stop loss up since then, and I've moved it up into here. But we'll see what happens tonight. If we get a slight pullback and a bounce, we could take out the 127 and then hold above it, and that would be an opportunity to add to your position long, and then move your stop losses up once again if you are already in that position. But I see that as a trend that's going to continue for some time, especially with oil not doing a lot, and the Canadian economy also starting to see signs of the low oil prices affecting their data. It's not in a terrible way, but you can tell that lower oil prices is definitely hindering the performance of their economy. The US versus the yen, we do have this triangle breakout. We spoke about it, and it's quite interesting. We do have this interesting candle that I spoke about in the fundamental video, that the US dollar versus the Jap actually had a pretty big pullback and last night. And this is what I call a key reversal day, and it's where the market took out the highs of the previous day, and it actually took out a previous high of the breakout, and it just stuck its head above it, and then sucked all the way back, and then it closed all the way back down here and closed below the close of the previous day. Now, that is a big shift in momentum. It's a big candle, it's a big statement, and something has caused that. And what has caused that is risk aversion. So it's not the fact that the US dollar has lost its appetite, because you can tell by the other charts that that's still a common theme, but purely on a US dollar basis versus the Japanese yen, without any other factors of other economies, because the Japanese economy is quite flat and not a lot happening, and it's been like that for some time. So this is somewhat an indicator of the US dollar index, which I'll bring up in a minute. We've seen that the US dollar come off a little bit last night, along with bond yields and along with equity prices. So we could see this continue tonight. Now, if I go to a 4-hourly chart, and you're seeing this is the high here of that daily candle. If we see, now we're trading here right now, and we could possibly see a head and shoulders pattern, shoulder and a shoulder, and then it could fall away. And if it takes out this low here, there's possibly a little scalp to short it. I'm not a big bear in US dollars, and we all know this, but it's an opportunity to pick up 10, 15 pips maybe. And we could see a pullback in the short term, just purely due to this risk aversion that's going on. It's something to keep an eye on, but once again, if we take out the $1.122, I will be adding some positions going long that I'm already in. I've raised my stop losses up to here, and I'll potentially look to move them up to here and then take a short position. So I'll lock in all the profits that I've made through here, and then I will exit here. I'm happy to give up whatever profits we've got there, just in case that this move last night was a one-off occurrence, and it continues north, and then the support here holds up. So it's just something to keep an eye on, and something to think about, and potentially a trading opportunity. If I quickly show you the US dollar index, we will see here that we have had a pretty good run recently, and today we're looking quite flat. The stochastic is up in the upper range and looks like it wants to cross over. I wouldn't be surprised if we do have a slight pullback a little bit. This is getting further and further away, as it does at times. It gets a long way away from the trend on the moving average, and it's healthy for it to just drift sideways or have a little bit of a pullback, and maybe this risk aversion could instigate that. We'll have to wait and see. I'm not calling that just yet, but something to keep an eye on. If I just put in a 1-year chart, and I'll show you on the daily candle the trend. So here's the trend right now, and as you can see with the stochastic, we are at extremely high levels, and there is an opportunity for it whenever it gets to these levels to pull back. And we are due for a pullback, because this rally here is since June last year, we have just screamed higher, and we're up 30%. So it's something to think about, and we'll have to wait and see what happens, but it's just something that I like to look at all these things and keep them in the back of my mind. But hopefully you've made some money, because when the markets are trending, that's when the time is to make money, and keep locking in those profits and keep adding to those positions until the trend starts showing signs of changing. And when that trend does change, make sure that you stay disciplined, stay out of the market for a little bit, maybe reassess things, and don't give back some of those profits. Anyway, I've spoken enough today. Trade well in this session. I'll be back again tomorrow. Hopefully you pick up some money tonight and also tomorrow. Till then, trade well.